CBDCs, central bank digital currencies. They are coming, and the digitalization of fiat money will be the final nail in the coffin for freedom. We know what's coming. We've been covering this since 2020, which marked the beginning of the end for financial freedom. Well, luckily this content will always stay free in all sense and cost, because it's time for Chico Crypto. To begin, central bank digital currencies, what are they exactly? Well, it's a digital form of a country's fiat money, usually issued by the central bank of that country. And guess what? These digital currencies are powered by Satoshi Nakamoto's invention, the blockchain. But they aren't powered in the decentralized sense. Unlike Bitcoin, where the distributed network of miners and nodes make up the trust layer, with CBDCs, the government and the central bank who issues the currency is the trust and consensus layer. This means that the government, the central bank, and large financial institutions will run and control the node or nodes, which power the network by validating and verifying all the transactions. It's a private and permission shared ledger, which means they will have financial power like never before. Before we get into those powers, how do we know CBDCs are about to deploy across the globe while rejecting Bitcoin? Well, the IMF, the International Monetary Fund, whose purpose is to ensure the stability of the international monetary system, just tweeted this last week. A picture example of CBDC systems, and the words, "How will central banks issue and circulate digital currencies?" Our new fintech analysis looks at 3 models with a link that takes us to their newest report. Behind the scenes of central bank digital currency, emerging trends, insights, and policy lessons, where they go through some of the deployed and planned CBDCs in IMF partner countries like the Bahamas, Canada, China, Eastern Caribbean Currency Union, Sweden, and Uruguay. This is the same IMF who is going after El Salvador for them passing laws to make Bitcoin their legal tender. Bitcoin will be El Salvador's CBDC, a distributed, uncontrollable system that the powers that be do not like one bit. So let's examine one of the more robust CBDCs and most popular, as it comes from the world power China, who's conveniently the IMF's second top member, with over 6% of the group's voting power. China, all the way back in 2014, shocked the world when they launched their country's social credit system, which has taken a page right from the Netflix series Black Mirror. In China, citizens are now abiding by a moral ranking system, and for years they've been monitoring their behavior of the enormous population, and it ranks all the citizens based on their social credit. This is a game of life where each citizen is assigned 1,000 social credit points, and they can gain points or lose points based on their behaviors. What is good behavior? Well, like praising the government on social media, that can gain you points. But if you criticize them online, that is deemed bad and it will drop your score. Good scores above 1,000 give you benefits in Chinese society, like priority to school admission and employment, easier access to cash loans and lines of credit, cheaper public transport, and even tax breaks. But bad scores below 1,000 have consequences. You can be denied licenses and permits and access to social services. You can be excluded from airlines and taking railways. You can have your access to credit stomped out, and they even go as far as public shaming. Although this social credit system couldn't be fully realized until a digital currency fully controlled by the government was issued. That's why 5 years later, in 2019, China unveiled their DCEP system for a central bank digital currency. The digital yuan has been live within their country since the middle of last year and debuted to the international community at the Olympics this year. DCEP stands for Digital Currency Electronic Payment. Not to decept you, but DCEP borrows a distributed blockchain's key concepts, such as a peer-to-peer network of payments, traceability, and tamper-proofness from outsiders. Although since the People's Bank of China is the issuer and provisioner of funds, they are the gatekeeper, meaning tampering of accounts and funds can happen through them. This centralization means that China's government has the ability to freeze and close accounts at will. But on the flip side, the government can rectify mistakes made when using or transferring the digital currency. The government and the PBOC have the ability to tamper and tamper where they see fit. As we can see from this article, the digital yuan is programmable, meaning smart contracts can be implemented. The first programmable function being initiated is an expiry date, meaning the currency becomes useless if not used within a certain time frame. This forces consumption by the people who use it. An expiry date to begin, yet the programmable functions will only grow and get more overreaching as time goes on. For example, since the Chinese government is looking for their citizens to be healthy, they already provide free gym membership for those with a good social credit score. They could eventually implement a function which only allows citizens a certain allowance of junk food per month. If a citizen goes over the digital yuan allowance for junk food, they would be forced to only buy healthy meals allowed by the rules of the program. If they go to buy junk food, their card or application wouldn't work. The government can and will control citizens even down to what they eat. Just think about it. The government will decide how money is being spent by their citizens, the clothes they wear, the places they go, the people they transact with, or even down to the people they spend money with. If one of your friends is on the social bad end of things and you are on the good, it's possible the government could stop you two from enjoying a meal together, going to see a movie together, or shopping at the mall together. So we know China is already moving forward and has developed their CBDC system. And large world organizations like the IMF and even the WEF are promoting them as the next wave in the financial revolution. But what about other world powers like the United States and Russia? Well, let's begin with Russia. Back in June of last year, they started their CBDC trial with a total of 12 of their banks announced for the testing group. Well, earlier this month, that trial was announced as a success. As we can see from the Cointelegraph article, they say 3 banks out of the 12 financial institutions in the digital ruble pilot group have already integrated the CBDC platform, with 2 of them completing a full cycle of digital ruble transfers between clients using mobile banking applications. Well, I'm sure some of these banks that took part in this trial are some of the banks hit with the heavy sanctions just announced 2 days ago. President of the European Commission, Ursula von der Leyen, announced they were removing a large number of Russian banks from the international payment and messaging system, SWIFT, effectively isolating them and stopping any and all financing through the traditional systems, including trade like imports and exports. Although CBDCs are not the traditional system, and governments who issue them are in control of the messaging. Could China and Russia still be able to trade through their CBDC systems that were built to be interoperable? Well, I think so. Back in December of last year, this article came out after Putin's foreign policy advisor made statements in the media. China and Russia to establish independent financial systems. And the article states, Russia and China have agreed to develop shared financial structures to deepen economic ties in a way that will not be affected by pressure of third countries following talks between the top leaders. During the talks, the top leaders of the 2 countries called for increasing the share of national currencies in mutual settlements and expanding cooperation to provide Russian and Chinese investors with access to stock markets, said Yuri Ushakov, Putin's foreign policy advisor. Yuri also said particular attention was paid to the need to intensify efforts to form an independent financial infrastructure to service trade operations between Russia and China. So what if this happens? CBDCs are used to facilitate trade between these two countries, and it's a resounding success. CBDCs settle instantly, while SWIFT payments can take 2 to 5 working days to officially settle. Well, it will force other world powers to move on the fast track of developing their own CBDCs, like the United States. Remember, back in January, Bloomberg reported that a crypto executive order would be released in February, and the article said, the administration is also expected to weigh in on the possibility of the US issuing a government-backed coin, known as a central bank digital currency, or CBDC. Although in February, Bloomberg released this article which said President Joe Biden's cryptocurrency policy rollout was delayed by a dispute between White House officials and Treasury Secretary Janet Yellen over the scope of a pending executive order that could include a digital dollar. Senior administration officials have now completed a draft version that is ready for Biden's consideration, though further action could be delayed because of the Ukraine crisis. This article came out a week before Russia invaded Ukraine. They are delaying it, the executive order. Now, if we see alternatives to SWIFT being facilitated by digital currencies and CBDCs from Russia, China, or a combination of the two, the digital dollar, aka the US CBDC, will be of the utmost importance. It's possible, with the way the media covers it too, they could even get citizens to be behind the creation of one. 3 of the world's most powerful countries, China, Russia, and the US, all deploying CBDCs within the year? I don't doubt it. And that marks the end of freedom and the beginning of the real fight. Cheers, viewers. I'll see you next time.